Bank of Japan holding its key rate steady amid renewed yen weakness and political uncertainty at home and in Washington. More big tech earnings in focus. Investors unimpressed by Meta's spending guidance despite a sales beat. Microsoft also slipping on a disappointing cloud growth forecast. And Israel considering a proposed ceasefire in Lebanon and what appears to be a push to make progress ahead of the US presidential election next week. Well, it's just gone 8 a.m. across the Emirates. It's 3 p.m. here in Sydney. I'm Paul Allen in for Jemima Bertech. Let's take a look at how markets are tracking at the moment. We've got S&P E-minis looking a little bit softer right now, and in fact, it's following the trend we've seen in Asia. Most of the major markets are a little bit weaker at the moment. The main game in town, though, is the Bank of Japan, as we've been hearing. No change expected to rates on hold at 0.25%. That's pretty much what we expected, but there's a lot of political uncertainty both within Japan and around the US election as well. But the BOJ saying it sees a bit more upside risk for inflation in 2025. We'll have more on that in the moment. But we have seen the yen strengthen, relatively speaking, 152.98 at the moment. We've also got oil moving as well. Crude inventories falling by about little more than 500,000 barrels last week in the US. But as we mentioned there, the new Hezbollah leader says it'll consider a ceasefire deal with Israel under certain circumstances. Israel also saying that it's considering a proposed ceasefire as well. We'll explore that story. But against this backdrop of uncertainty everywhere, really, we're seeing gold climbing, pulling back a little off highs that we've seen today, but 2,785 an ounce. Very, very strong gold price there. Let's take a closer look at how markets in Asia are faring at the moment. Avril Hong's in our Singapore studio. Avril, what are you watching?
Yeah, Paul, we are watching the Japanese currency, how it's faring against the greenback. As you said earlier, it is stronger. We're seeing that firming up. But note here also, this is after 4 days of decline, so there might be a bit of squaring away of positioning in terms of guidance from the BOJ. If you look at the statement, there hasn't been very much clear direction for forex traders. Yes, there was some talk about the upside risk to inflation next year, but it also trimmed the inflation outlook. So this speaks to how the market attention is really turned to what Ueda-san is going to say later today during his press. So let's flip the board and take a look at what Japanese equities are looking like, as they've mostly held the declines, actually sunk a bit deeper into negative territory since coming back from the lunch break. Of course, this is post-BOJ decision announcement. And as I say, this is that focus for what Ueda is going to say, but also what you see in the Japanese equity space today might be more related to the earnings story. Paul?
All right, Avril Hong there in Singapore. Thank you. Well, we're keeping an eye on chip stocks in the Asian trading session as well. Earnings shedding light on divergent themes in the semiconductor sector. Let's get some more on this with our tech reporter, Annabelle Drulers. So, Annabelle, we've had a bunch of chip stocks reporting today. What's been standing out for you?
Yeah, Paul, I think it's that sort of divergent theme we're continuing to see developing here, where parts of the semiconductor market are holding up and others not as much. What came clear in the Samsung earnings, for instance, earlier was that we had a big operating chip division operating profit missing investor expectations or analyst expectations. There was a lot of concern around HBM products in particular. This is high bandwidth memory that's essential for AI infrastructure. Actually, the company said they're making good progress in this part of the business, and that's why we're seeing that stock gaining there, because there had been a perception that perhaps Samsung was losing or missing its AI moment. So that's sort of like the AI chip theme that also comes through in Advantest earnings as well, because we had Advantest rising to a fresh record high. This is a company that makes tools that are used in the testing of semiconductors, and their tools that are used in the testing of AI chips in particular have seen strong sales. And again, that plays into AI chips are hot, that demand is holding up. To the flip side, it's concerns around legacy chips, and this came through in the Renesas earnings. You can see they're also in Tokyo. That stock is sliding today after it reported a weaker forecast for the fourth quarter. This is a company that makes chips for the automotive sector, for instance. And again, legacy chips, older technology that's used in cars, consumer electronics like Samsung as well. They flagged that they're weaker sales or smartphone sales going forward. That's not a good signal for that part of the semiconductor industry.
So away from the AI hardware story, how about the demand for AI services? How's that holding up?
Well, this is also a sort of a theme that we're really seeing developing here, where investors are continuing to ask these big tech giants on Wall Street, where's the ROI and what sort of demand are we seeing? It was interesting, for instance, in the Microsoft figures, we actually saw sales or shares slipping after hours or in late trade when the company said that the outlook for its cloud business was coming a little bit short of expectations. That's not necessarily because the demand isn't there. The demand does appear to be holding up. The concern is that Microsoft can't actually meet that cloud demand just yet, and so as they try and scale up their cloud business, that could eat into their margins. They've also invested heavily into OpenAI, and OpenAI isn't really delivering big returns just yet. Meta, of course, another one, and they said that they were going to continue investing heavily in AI infrastructure, and that's been the real tug of war because, yes, investors to a degree have liked that Meta's been sort of at the forefront of the AI industry. At the same time, they don't like seeing so much money going into it and not getting any sort of return back just yet. So that's stock down in late trade as well.
All right, tech reporter Annabelle Drewl is there. Well, as we know, the Bank of Japan kept its benchmark interest rate unchanged after uncertainties increased over the outlook for the economy, as well as the stability of the government. Bloomberg News senior editor Brian Fowler joins us now from Tokyo. So, Brian, that hold, we all expected that, but did we learn anything about what's going to be next for the BOJ?
Well, Paul, I think we will learn in the next couple of hours something from when Ueda speaks and holds his press conference. Remember, he's under a lot of pressure. The BOJ came under criticism for not telegraphing its intention to hike back in July. So he's under a lot of pressure to be very clear with a message. And at this point, 50% of economists expect a hike in December, 24% say it'll come in January, and the rest say it's going to come even later. So we'll be watching Mr. Ueda's comments very closely to see whether he emphasizes, for example, the BOJ has time to mull its options, or the BOJ may need extra time to assess the potential impact on markets stemming from the U.S. election. That would hint at a later hike, or he may talk a lot about inflation. The statement this morning talked about price risk being to the upside for next fiscal year. We've also lately had CPI for Tokyo and the national CPI that both came in just a tad hotter than consensus. So if he talks about inflation and perhaps cites the weak yen impact on inflation, that might hint at an earlier hike, possibly in December.
Yeah, let's talk a little bit more about the yen because it has strengthened, but barely. What impact is the yen going to have, and what sort of commentary can we expect from Governor Ueda around this in the coming hours and the coming weeks as well?
Yeah, I expect him to talk about it. I don't think he'll say directly that we're going to, yen at this level means we have to hike, but I think he could hint at that. And one thing to point out is that the yen right now is weaker than it was when the BOJ ended its negative interest rate policy back in March, and it's right around the same levels of where it was in July when it hiked the last time. So Ueda could definitely talk about the potential for the weak yen to drive up import prices. And he's also, the bank this morning said that all things being equal, currency moves now have a greater impact on prices than they did in the past. So if he goes hard on that line of reasoning, that would probably telegraph an earlier hike.
All right, that is senior editor Brian Fowler there joining us from Tokyo. Still to come, Adnoc Drilling's third quarter profit beat estimates. We're going to speak to the firm's CFO, Youssef Salem, on earnings and expansion. Up next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Saudi Arabia is set to back Brookfield Asset Management's new $2 billion Middle East fund. This will give the Canadian investment firm extra financial firepower in the oil-rich Gulf region. At least half of the fund will be allocated to deals within the kingdom and to international firms looking to expand locally. The partnership marks the latest example of a foreign firm raising a Middle East-focused fund, following similar efforts by Goldman Sachs and BlackRock. Adnoc Drilling's reported profit for the third quarter that beat the average analyst estimate. The company says growth was fueled by the expansion of onshore and offshore fleets, as well as the continued growth of the oil field services segment. So let's bring in Youssef Salem, the Adnoc Drilling CFO. Youssef, thank you so much for joining us today. Now, it was a really good third quarter, following on a solid 9 months as well. And so you've raised full year guidance, but the guidance for EBITDA, net profit on the high end is unchanged. Was there any temptation to be a little bit more aggressive here? What challenges do you see in the final quarter?
So definitely we're trending towards the top end of that guidance. We've had so far 5 consecutive quarters of beating guidance and continuing to raise expectations going forward. And hence we wanted to make sure that while we're very confident trending towards the upper end of that, we also want to make sure that we can continue our kind of beat and raise trajectory so far.
So you've already announced a progressive dividend policy to reward shareholders, but you've got some really healthy growth numbers here that you're reporting. Is there any room to increase that payout even further?
So yes, we've increased basically the minimum floor annual increase in dividends from at least 5% to at least 10% per year. So now starting with $788 million dividends this year, then growing by at least 10% every year for the next 5 years for a total of at least $4.8 billion, which is close to 1/4 of our market cap over the next 5 years. Yes, this is just the bare minimum floor, and the board would kind of every board meeting effectively review the potential for additional either faster increases, discretionary dividends, or other dividends on top, because as you said, with the massive free cash flow generation we have, we're able to both reinvest massively in the business as well as further upside for distributions.
You're also guiding that CapEx is going to be higher. I'm wondering if you could tell us a little bit more about that. You're spending more on activity, or are the costs of rigs and labour going up?
Exactly. We're investing more both organically, where this year we'll have $800 to $900 million of organic capex, where we're growing the fleet. We've gone over the last 3 years from 95 rigs to 140 rigs now, so increase the fleet size by 50% as we cater for Adnoc's 5 million barrels per day plan by 2027 on the oil side, and more than doubling the LNG gas capacity side. We also will continue to have that capex going forward as we go from 140 rigs today to 148 rigs by 2026. Similarly, we also have our inorganic capex, where we've set up 2 platforms. One is Inzerillo, our joint venture with Alpha Dhabi for investments in technology and AI, for a total amount of $1.5 billion. Half of it this year, half of next year. And then Turnwell, which is our JV with S&P and Patterson, which is our lump sum turnkey platform.
Yeah, can you tell us a little bit more about the Inzerillo JV? You've been quite active in the M&A arena. What's the progress on the Inzerillo deal at the moment?
Yes, we've signed 3 transactions so far, Gordon Technologies, MTS, and EV. We've closed the first one, Gordon. These are proprietary patent technologies. Between them, they have more than 120 patents, operating in more than 35 countries, bringing all of these technologies back to the UAE and the Middle East, where they've all set up operations in order to future-proof our businesses here, increase our share of the wallet. Today, in the oil field services side, we started that business 5 years ago. Today, 70% of the fleet in the UAE is not only drilled by Adnoc Drilling, but also serviced by Adnoc Drilling. 50 of that on a fully integrated basis, and 48 rigs on a discrete services basis. So we'll continue to bring technologies, increase margins, and increase the share of the wallet that we have in the UAE from these services.
Can you tell us a little bit more about the M&A plan more broadly? Are there any other targets that look appealing to you, or any other regions that you're looking at?
Yes, so effectively you have 2 verticals of M&A. One is via Inzerillo, where effectively we're going to be completing very shortly, deploying half of the amount. So half of the $1.5 billion budget will be deployed this year, 750. So we're already at 550. So around $200 million left will be deployed very shortly this year. And we have EDIPAC conference coming up next week. We're going to be showcasing Inzerillo and its investments. And then next year we'll be deploying the remaining 750 million, looking at adjacent sectors to drilling and services, like, for example, completions, intervention, etc. And then the other side of M&A is directly by Adnoc Drilling itself, where we're looking to expand outside the UAE. We've already launched organically in Jordan, and we're also looking at both organic and inorganic opportunities to launch in Oman and Kuwait.
We've seen a little bit of weakness in the oil price recently. I'm wondering if you can tell us about your outlook for the market more broadly, particularly on the services side, and at what price do you think that some operators might be looking to begin idling rigs?
The very unique nature of the Middle East, more broadly and specifically the UAE, is it's working backwards from specific capacity. So short-term changes in production do not interrupt the overall well plan, which is tied to capacity building. So for example, in the UAE, it's reaching a certain capacity target of 5 million barrels per day of oil by 2027, increasing gas to both meet domestic self-sufficiency as well as the LNG expansion. And hence, regardless of production level at any point in time, the well and hence the drilling program will continue to be able to achieve these numbers. And that's why you've seen that Adnoc Drilling throughout COVID, throughout the previous 2015-16 cycle, we've continued to grow through the cycle. And that's why we have a very unique business model where it's up to 15-year contracts, more infrastructure-like, because effectively it is seen as critical infrastructure capacity building by the country, as opposed to being tied to any short-term production targets.
How's the macro demand picture looking to you as well? Because, we've got a security situation that's obviously in flux in your part of the world. We've also got an election coming up in the US next week and uncertainty about the demand picture in China as well. So how's the broader picture looking to you at the moment?
Yeah, I think from a Middle East perspective, and obviously you've been covering what's been happening in the Middle East and this week in FII and all the upcoming, etc. You would see that kind of the GCC more broadly and the UAE kind of more specifically and neighboring countries as well are progressing with kind of with their full plans, full steam ahead, regardless of any kind of fluctuations or geopolitics or other global events. Again, that's just the beauty of how the GCC is able to operate on these very long-term stable plans. And hence, while we kind of continue to witness these various global interruptions, I think from our business and the more broadly the business environment in the GCC and the UAE, we continue to kind of be full steam ahead, and we obviously benefit from interest rates coming down. As Adnoc Drilling, we offer a progressive increasing dividend on a dollar basis. So as interest rates drop, Adnoc Drilling continues to be a more and more appealing investment. Plus, our own kind of cost of debt comes down because it's on a floating basis, and hence we have a double benefit from the upcoming macro environment.
All right, Youssef Salem, we'll need to leave it there, but thank you so much for joining us. Youssef Salem is the Adnoc Drilling CFO. Thanks very much. Still to come, ceasefire between Israel and Hezbollah. The US is planning or pushing a plan to pause the conflict. We'll discuss the details of that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Israel is considering a proposed ceasefire with Lebanon that will keep Hezbollah fighters away from the border. Prime Minister Benjamin Netanyahu is hosting senior White House mediators today as part of talks on a pause. If the plan was agreed, it would lead to a 60-day suspension in the conflict to ensure that Hezbollah doesn't receive any new arms from Iran and moves north of Lebanon's Litani River. This is according to Israeli officials. However, Hezbollah's new leader, Naim Qassem, says the group would only accept a deal that meets Lebanon and the militant group's demands. For more, Dana Khesh, UAE Bureau Chief, joins us. So, Dana, what would this ceasefire plan include?
Yes, good morning. The ceasefire is a 60-day cessation of hostilities in which the international community, including the U.S. and others, would monitor the implementation of the UN Security Council Resolution 1701. And that resolution sees the withdrawal of course, Israeli troops from southern Lebanon, but also moving Hezbollah fighters away from the border up to the Litani River. And it also sees that the Lebanese army would recruit more soldiers, deploy them along the border with Israel, along with UNIFIL, which is the UN peacekeepers who've been there for decades in Lebanon. Now, this seems to be the proposal that the U.S. is pushing for, and they don't really have much time since elections are going to be next week. And they're trying to, in a last-minute ditch, of course, get a ceasefire agreement to end the conflict in Lebanon, which could potentially have a positive impact on the conflict and the war in Gaza, too.
So we've also got Hamas saying it's open to a truce plan in Gaza. Do we know details of that?
We don't, but media reports have said that the proposal on the table is not a long-term ceasefire, but a short one that could potentially lead to a longer one. And we saw yesterday Israel's defense minister saying to troops that we need to keep the pressure up on Hamas in Gaza in order to ensure certain conditions that would help us return the hostages still held in Gaza over a year now. The last ceasefire in Gaza was about over a year ago, and that was very short-lived. It was about 2 weeks, and then hostilities continued in Gaza and elsewhere. And we see Hamas still fighting Israeli soldiers, especially in northern Gaza in several areas there. And so what Israel wants to do primarily is, one, end Hamas's reign over Gaza and return the hostages. And it seems that these talks are still ongoing. We saw the U.S. officials in Qatar. They were discussing the ceasefire, of course, with the mediators, including Qatar and Egypt. And we also now are seeing U.S. officials coming back for the region, including to Israel this week to also discuss the Lebanese ceasefire. So there is effort on both sides, right, on the Lebanon side, on the Gaza side, to get to an agreement before the U.S. elections.
Yeah, Dana, just quickly on that point, how realistic is that timeline? It seems pretty crunched.
It is pretty crunched, and we're not sure how either Hamas or Lebanon would react to certain conditions in the ceasefire proposal. So what Israel wants is that it wants some kind of a freedom of military action in Lebanon so it can strike Hezbollah infrastructure whenever it wants. And that might become a very sticky point for Lebanese officials and Hezbollah itself, because that it would mean violating the sovereignty. And that's something that Lebanese officials have been complaining about for years now, since the 2006 war. And so this might be a sticky point, and also having the Lebanese army striking Hezbollah infrastructure by itself, or given it this mandate to do that, can also be difficult, because the Lebanese army has always remained neutral and on the side, fearing any civil unrest between itself and Hezbollah supporters in the country.
All right, Diana Kresh, our UAE Bureau Chief there, thank you so much. Well, the Dubai International Finance Centre has suspended multiple companies that sources say are part of a network overseen by Iranian oil trader Hossein Shamkhani. Bloomberg understands Milavis and Ocean Leonid have been suspended by Dubai's free zone amid mounting pressure from international regulators. A lawyer for Shamkhani says his client has no relationship with either company. All right, let's take a look at how some of the key assets are tracking around the region at the moment. We've got S&P E-minis showing a little bit of weakness, off about 0.4%. Nasdaq futures softer as well. Of course, it's been a pretty average day for tech around the world. Meta was a little bit of a letdown, as was the Microsoft cloud unit. Samsung third quarter net profit beat, but the stockies anyway, the chip division operating profit fell a bit short of estimates there. So we're seeing a little bit of softness around tech futures there. Also, we're seeing an oil price which is gaining, relatively speaking, 73.02 for a barrel of Brent at the moment. China's luxury spending slowdown up next. We'll discuss that topic in a moment. Swiss watchmakers suffering a sharp decline in demand. This is Horizon's Middle East and Africa. Our top stories today. The Bank of Japan holding its key rate steady amid renewed yen weakness and political uncertainty at home and in Washington. And Israel considering a proposed ceasefire in Lebanon and what appears to be a push to make progress ahead of the US presidential election next week. And Airbus has won an order for 60 jets from Saudi Arabia's new carrier, Riyadh Air. Well, it's just gone 8:30 in the morning across the Emirates. It's 3:30 in the afternoon here in Sydney. I'm Paul Allen in Sydney, in for Jumana Bezetchi. Let's take a look at how markets are tracking. We are talking about the BOJ today, and we have seen the yen strengthen a little bit, 152.83, so still quite weak comparatively speaking. The BOJ was, of course, staying on hold. No surprise there. The key rate remaining at 0.25%. Bit of uncertainty around the political backdrop, as I mentioned, but also the BOJ mentioned price risks are skewed to the upside for 2025. We're standing by for Governor Ueda's press conference. We've got S&P E-minis, Nasdaq futures looking a little bit softer as well. We're seeing government bonds dropping. Also, the US economy very robust, growing 2.8% in the third quarter, powered by consumer spending. So we're seeing traders trimming bets on rate cuts as well. What do we have elsewhere? We've also got an oil price which is recovering somewhat. Brent just punching through in the last few seconds above that $73 a barrel barrier, 73.02 right now. The gold price backing off a little, but still hovering around those near record highs on an uncertain backdrop. Right, let's check in on how markets in Asia are faring. Avril Hong's in Singapore, keeping an eye on things. Avril, Bank of Japan, the story of the day. What are we watching?
Absolutely. It is what we are keenly watching out for, especially ahead of Ueda-san's presser. And we're actually seeing the Japanese currency extending the initial gains, moving further below the 153 level. Some of this has been attributed to the squaring away of positioning in markets, but also you think about how it raises GDP outlook for next year. And perhaps some of that is filtering into what we're seeing in Japanese equities, but this is also this extension of decline on the Nikkei and the topics partially to do with the earnings story. Hitachi, Kyocera, these are the big drags on the gauges in the country today. Of course, another stock that's in focus is Samsung. Its chip division didn't do so well, but there also seems to be a sense that it's been making headway with supplying NVIDIA with AI chips. Of course, China also in focus. Today, we saw factory activity data and that unexpected expansion, along with some media reports that these property developers in the country might be getting support via 4 trillion yuan of special bonds. So a bit of a recovery from the losses from earlier in the week. Paul.
All right, Avril Hong in Singapore, thanks very much. Now let's talk about China's luxury spending slowdown. That's getting worse. Swiss watchmakers are suffering from a sharp decline in demand amid the current pullback. Breitling CEO Georges Kern is remaining upbeat and is confident that the luxury industry has hit bottom. And Georges joins us now to tell us more. So, Georges, it was just back in September you were here on Bloomberg TV telling us that the luxury market has hit the bottom. Well, since then, we've found things could get a little bit worse. We've had Swiss watch exports falling a bit more, LVMH and Hermès disclosing a sharp drop in watch sales in their financial results. So are we at the bottom now, or could there be more to come?
Well, it depends on the countries. China remains difficult, but USA has been picking up lately. What you see today in the watch market in particular is a kind of K development. So meaning a couple of brands doing extremely well. In a way, the winner takes it all. And then many brands going sharply down. So yes, you have to be part of the first group and continue to gain market share. And this is the case for Breitling.
Well, let's take a look at some of those divergent markets that you mentioned. The US, as you say, has been performing fairly well. How do you expect the US consumer to behave after next week once the election's out of the way? And do you think there's going to be a difference depending on who wins, whether it's a Trump victory or a Harris victory?
Well, that's very difficult to say. We as managers and as corporations, we have to adapt to any situation. Of course, Donald Trump certainly has or will be given impulses to the economy, but we don't know. We don't have a crystal ball in our hands, and we have to deal with the situation as it is. There are other countries growing, like India, Malaysia, Indonesia. You cannot fight demography, so there are many, many countries out there where there's growth potential. But bottom line, the US economy is extremely resilient. We have been talking about a recession in the US since years, and it never happened. And I don't believe that the election will influence this status quo.
In terms of not fighting demography, let's talk a little bit about China, because of course some of the troubles and consumer confidence there are well known. How are you approaching that market at the moment?
Well, we continue our investments. We started really as Breitling only after COVID in a very, I would say, professional way. But China represents for us only 6 or 7% of our turnover. So thank God we are not dependent. A couple of years back, I was a little annoyed about the situation. Today, we are part of the brands which are very lucky. As you know, many watch manufacturers are dependent, really dependent on China, generating 40, 50% of their sales. So imagine you have a drop of 30% or 40% in China, what influence this might have on the top line of the whole company. So you have to be a plane with 5 engines, and even if one engine has a problem, at least the 4 other engines should work, and this is basically our philosophy and strategy and management approach.
Yeah, some of your competitors, of course, have struggled in that regard. We've seen some employees furloughed. Do you expect to see some more of that going forward?
I really believe, and I hope it's not wishful thinking, that we have reached the bottom on a worldwide level. We've seen across the board of the last 3-4 months an increase of sales. Of course, consumer sentiment is influenced by geopolitical situations, and you've discussed about that. But interest rates have been decreased. There are some also economic impulses given by the Chinese government. So we see a kind of recovery. I hope it will stabilize, and we will see growth again in the next coming months on a worldwide level. Again, the country I'm the most confident about is certainly the US, but also the UK is recovering a little bit. And again, you have amazing potentials in new, what we would call new countries and regions. Also India with 1.6 billion population, which is the 3rd economy worldwide and which is also growing.
In terms of some of the difficulties watchmakers are facing right now, is that something you've had to do, though, furlough employees or access government support programs, or are you managing?
No, we're managing, thank God, and I'm not a big fan of subsidies. We cannot only be sunshine managers in our business. The economic environment is what it is, and as Warren Buffett used to say, when the tide goes down, you see who was swimming naked. And hopefully many companies have a good bathing suit on. The world is tough out there, but we're fighting, and I'm confident, and as I said earlier, we're growing again. So yeah, let's take it from there.
Just finally, I want to ask you about the Universal Genève brand that you bought last year. Can you give us an update on that? Might we see some new watches? How would you position them in the market? And in terms of timing, is this really the right time to be doing something like this?
No, absolutely, because interestingly enough, it's the super luxury, the luxury and the super luxury market which is the most resilient. It's the entrance price point which is suffering. So Universal Genève will be positioned above, far above 10,000 US dollars. And this is something which will add value also to Breitling. Breitling's average price is 8,200 now, but Universal Genève will start at 13,000, 14,000 US dollars. So I think it's a very good complement to what we offer today with Breitling. It's a totally different brand. It will be managed in a different way. The retailers are waiting for it. We just launched yesterday all our social media, and I invite everybody to have a look into this fantastic brand, which will be relaunched by 2026.
All right, Georges Kern, the CEO of Breitling, thank you so much for joining us. Now let's take a look at some of the other stories that we're following. Eli Lilly shares tumbling after it cut the top of its full-year sales guidance by $600 million following lackluster sales of its weight loss and diabetes drugs. Quarterly revenue for the Zepbound Mounjaro franchise missed estimates for the first time, raising questions about demand for the shots. The drug maker blames the shortfall on inventory issues. Trafigura is preparing to take a $1.1 billion hit after discovering what it suspects was fraud involving employees. Trafigura says staff in its Mongolian oil business manipulated data and documents and deliberately concealed overdue debts. The announcement confirms earlier reports by Bloomberg and may force the company to restate prior earnings. Coming up, Airbus wins a 60-jet order from Saudi Arabia's new carrier. We'll have the details of that next. And by the way, we'd like to hear from all our viewers, so we've put together a short online survey. You can scan the QR code that's on your screen right now. We'd like you to tell us what you'd like to see more of on Horizons Middle East and Africa and all of Bloomberg Television, plus any other suggestions for improvement. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. Airbus has won an order for 60 A321neo jets from Saudi Arabia's new carrier as the kingdom pours billions of dollars into turning the country into an aviation and tourism hub. The CEO of Riyadh Air, Tony Douglas, spoke with Bloomberg's Jumana Bezetchi on the sidelines of the Future Investment Initiative conference in Riyadh.
We've already placed an order for 72 787 Dreamliners. So for us, the right aircraft in the narrow body space was the A321neo. It's an incredible aircraft from an environmental performance, from an overall cost efficiency standpoint, but for us, most importantly, guest experience. So special moment in our time.
For more, let's bring in Bloomberg's aviation reporter, Leen Al-Rashdan. So, Leen, can you give us a sense of how important this order is for Airbus?
Hi, Paul. Yeah, I mean, this is a really big win for Airbus. This would be their third major order from a Saudi carrier. They've had 60, now 321 neos, and two major orders of over 100 narrow bodies from other Saudi carriers this year. And this is an order that Boeing and Airbus were fighting for. We previously thought for a very long time, there was speculation that it would be Boeing. And now that it's gone to Airbus, this is another hit for Boeing while they're going through a really tough period, especially with the union strike. This kind of crippled production on their narrow body jets.
So tell us about what this order means for Riyadh Air, and is this just the start? What more could we expect to hear from them in terms of orders going forward?
I mean, we can expect to hear a lot from them. They're now, Tony Douglas mentioned that they're now going to be working on a even larger wide-body order. They already have ordered 72 787 Dreamliners. Now they have the narrow bodies. These are going to help them with some of the shorter routes. But also they mentioned that they chose Airbus because they could get different configurations. So this will help them with their, to reach more destinations. As they've said, they wanted to reach 100 by 2030. So we have the next wide body order to look forward to, and that will be even larger. So we're talking 777X or 350-1000. And then we have all their other announcements. I mean, this is a new carrier. They're set to launch in the summer of 2025. We've not seen what the airplane looks like inside. We've not seen a lot of the technology that's going to go in. So there's a lot to look forward to, and they'll be announcing those on a monthly basis up until their launch.
So after the launch in 2025, what are the growth plans from there? I understand this is a part of a drive from Saudi Arabia to diversify its economy. How does this dovetail with plans around tourism, and what's the airline expect it's going to look like by 2030?
Well, for the PIF, the Saudi Sovereign Wealth Fund, this is a really big project. I mean, they're pouring a lot of money into it. And they're hoping that it will be something like Emirates or Qatar Airways. As we see, I mean, these airlines have really boosted tourism and economy. They make a big chunk of the, for Emirates, for example, they make a big chunk of the Dubai GDP. So Riyadh Air will kind of rival these carriers. They want to get more traffic into Saudi Arabia. They want to have their own luxury brand. They want to have their own luxury airline. So it plays a big role into the Saudi Vision 2030 because they already have a flagship carrier, Saudiya, but they want that to be more for religious tourism, and then we can get Riyadh Air. That's, they have these funky new cabin crew fashion, as they call it, and it will it will be something new for the kingdom, and it will be part of their big push to get more foreigners in, to get more tourists, and to really step away from an oil-based economy.
All right, Bloomberg's aviation reporter Lina Larashtan, thank you so much. Let's take a look at some of the other stories that we're following. BHP has been forced to walk back comments about having moved on from its failed Anglo-American bid to avoid running afoul of UK takeover rules. Chairman Ken McKenzie made the comments at the company's shareholder meeting in Australia, sending Anglo shares tumbling. BHP says his comments were not intended as an official statement. Bloomberg has learned that the European Union is planning to launch an investigation into Chinese e-commerce platform Temu. This is over concerns that it's failing to curb the sale of illegal products online. EU regulators have carried out similar inquiries into Meta, AliExpress, TikTok and X. US-listed shares of Temu's owner, PDD, fell on the news. Coming up, the sports arm of Saudi Arabia's public investment fund sees big opportunities in the kingdom. We're going to hear more from SURJ Sports Investment's CEO next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Paul Allen. SURJ Sports Investment CEO Danny Townsend says patience is key to early-stage investments in sport. He spoke to Bloomberg's Jumana Bezzetchi on the sidelines of the Future Investment Initiative Forum in Riyadh about the sports arm of Saudi Arabia's public investment fund.
We want to ensure that we're investing in sports that are potentially ripe for transformation. Sports that have maybe sat in their heels a little bit over the last decade and looking into the future as we transition from what is more of a linear analog world into a digital world, and whether we can use our capital to help them transform themselves into the future and continue to grow on what are really strong foundations.
Basketball included in that?
Yeah, absolutely. When we look at our alignment with the Ministry of Sport here in the Kingdom, as I said earlier, the mandate we have is to invest globally, but also create local opportunities, whether that be through major events, whether that be through facilities, development pipeline of talent into the future. Those things are important for us, and we take them seriously, and we're excited by our mandate and what we can do.
Well, you talk about sports. Just to clarify, is this just male sports, or are you also looking into women's sports?
No,
as well?
absolutely. Everything we do is gender agnostic. You know, we see a big opportunity in the growth of women's sport. The Kingdom is obviously very focused on ensuring that women have opportunities to play sports, and globally that's emerging at a rapid rate, and I think it's probably emerging here in Saudi Arabia at a faster rate in comparison. So we definitely want to play our role in that.
Yeah. What about the appetite to get involved in sports streaming as well? Once you've acquired the stakes, how do you think of maximizing how much you're getting out of it?
Yeah, distribution's important. Obviously, how sports fans consume sport is changing. You know, the cable and linear audiences that we had over the sort of the 80s, 90s, and 2000s is drifting a little bit, and with the younger demographic, they're watching online, and the streaming services that are providing all of the entertainment experience for that younger generation are going to step further into sport. It's inevitable over time, and sport still is such a valuable commodity for entertainment. You know, consumers are passionate and loyal when it comes to their sporting choices, and the streamers know that, and I think they're being cautious, because I think we are in that transition from the cable linear customer to the digital customer, and I think they're right to tread sort of carefully, but I think in the not too distant future they'll be dominating the space.
His Excellency, the PIF governor, yesterday was saying that the fund plans on reducing the percentage of its external investments from what was historically around 30% to around 18%. How is that likely to affect your investments?
Look, I think our mandate, given we sit in the PIF MENA division, is very much around ensuring that the capital we put to work has GDP accretive outcomes for Saudi Arabia. You know, we want to see a thriving sport economy. His Royal Highness has placed sport high up on the importance level in Vision 2030 around getting Saudis mobile and playing sport, and that's part of the mandate that's really exciting, because investing in sport and just watching the capital grow is one thing, but actually seeing a genuine impact of social change and an economy emerging that will play an important part in the future of this country is really exciting.
That's SURJ Sports Investment CEO Danny Townsend speaking to Bloomberg's Jumana Besetchi. Now let's take a look at some of the other stories that we're following. Staying in Saudi Arabia, solar firm Desert Technologies is planning a massive jump in its production of panels and cells, and that includes building a $200 million factory in Jeddah to produce equipment with as much as 5 gigawatts of solar capacity a year. It comes as the kingdom races to meet its ambitious renewable energy targets to satisfy domestic demand as it diversifies beyond fossil fuels. New York headquartered Z Capital Group plans to invest as much as $2 billion in Saudi Arabia, and that's as privately held merchant bank seeks to expand its presence in the Middle East. The bank will launch a direct lending fund of up to $1 billion early next year, offering senior secured and asset-backed loans to small and medium-sized businesses. It will also deploy as much as $1 billion in private equity, private credit and infrastructure investments across the region, with support of Saudi Arabia's Ministry of Investment. All right, let's take a look at how some of these key assets are trading as we head into the top of the hour. We're seeing the yield on the US 10-year backing off a little bit. S&P E-mini futures also in negative territory to the tune of about 0.5%. We did some very positive US data out a little bit earlier. Traders trimming bets on rate cuts. Also, we are watching the oil price recover somewhat, and in the next little while we'll be hearing from the Bank of Japan governor as well. But that is it for Horizons Middle East and Africa. I'm Paul Allen. Stay with us for the next hour of this show with Jennifer Zabazaja.
This is Horizons Middle East and Africa, our top stories this morning. The Bank of Japan holding its key rate steady amid renewed yen weakness and potential uncertainty at home and in Washington. And Israel considering a proposed ceasefire in Lebanon in what appears to be a push to make progress ahead of the U.S. presidential election next week. Plus, South Africa under pressure. The rand weakened and bond yields rose after expectations of a fiscal deficit came in wider than expected. Good morning. It is just gone 9 a.m. across the Emirates, 7 a.m. here in Johannesburg, where I am. I'm Jennifer Zabasaja. Welcome to the second hour of Horizons Middle East and Africa. And we are in a busy season in terms of what's happening in the markets. So let's get right to it. If we take a look at where U.S. equity futures are, they are tilting to the downside right now. As you can see, they're in the red, NASDAQ futures as well as S&P futures. And that is partially coming after we saw some of the Magnificent Seven disappointing in their earnings results, weighing down markets, and in particular Microsoft and Meta and their disappointing results there. The S&P there down about 0.4%. We're also seeing the U.S. 10-year yield. We're paying close attention to that right now at 4.2783. We've been paying close attention to a number of data points that we're getting from the U.S. And in particular, we did get on Wednesday third quarter U.S. GDP, slightly weaker than expected. Brent crude also in the spotlight, edging higher for a second session, up right now about 0.6% right now at 73.02 cents. And that coming as we did receive a lower print of U.S. stockpiles and, of course, the Middle East in focus and what is happening there. I also want to end on this chart, though, because we are in the middle of earnings season, as I mentioned, and the Magnificent Seven is very close attention to. But here is also a very important chart for us to pay close attention to, and that is the cross-asset performance of the end of the month. We are taking a look at what we've been seeing over the past October, which has been volatile for a number of assets. But as you can see here, the dollar posting its strongest month since 2022. Let's, though, check in on how markets in Asia are faring. It has been a busy morning over there, and Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, we're also in the midst of earnings season in Japan, and the stocks there have mostly trended negative amid some disappointments from the likes of Hitachi and Kyocera. That is figuring into the equation on a day when the Bank of Japan stood pat, but the attention is now shifting to Ueda's presser, and there is a lot of attention on whether he gives any form of guidance towards potentially a December or January rate hike, but managers your expectations here? Because given the election-related uncertainties surrounding the U.S. as well as Japan, he's unlikely to want to commit to a specific time frame or provide any guidance in that manner. But note here as well that when you look at the Japanese economy, I think the market seems to be reflecting that the hike to come is something that is appropriate, and there is that bit of strengthening or firming on the Japanese currency at the moment. You also see a bit of the moves reflected by the squaring away of the positions. Bonds in Japan also firming up today. Jen.
All right. Avril Hong in Singapore for us. Avril, great to have you. Thanks so much. Now, joining us is Omer Chowdhry, Aditum Investment Management, Head of Global Fixed Income and Multi-Asset Strategies. Omer, great to get you on. Okay, so we are looking at a ton of mixed interpretations of really what's happening in the markets right now. I mean, what are you focusing in on? Is it what's happening in the U.S.? Is it what the BOJ potentially is going to say later today? Give us a sense of where your head is at.
Thank you for having me. It's all of those things, actually. So we are focused on what's going on in the U.S. It's a busy week, and next week is going to be even busier. Obviously, what's going on in the bond market is extremely important. We're looking at the yield curve and putting on some duration positioning because we feel that the backup in yields that we've seen since the lows in September is presenting a pretty decent risk-to-reward opportunity to add duration to portfolios. We think a lot of the term premia from a potential Trump presidency is priced in. We'll have to see how the result comes out. You know, if it's a Harris victory, you know, some of that trade could unwind. And then, you know, if Trump comes into the House, we have to see in the first 100 days what kind of policies he actually enacts. Is he going to go really aggressive on tariffs or not? That's still waiting to be seen. In Japan, we're generally quite constructive. Obviously, we've seen some political noise recently. Japan has a history of having a pretty stable government, so this is kind of new for them. But we think they'll get through this. In terms of the Bank of Japan, look, they've kind of made it clear that they don't want to raise rates in the face of market turmoil. But at some point, they might have to actually push on the accelerator because they might, you know, see inflation levels rise. We're seeing inflation levels that aren't alarming in Japan. It actually helps corporate earnings. But I think with the weakening of the currency, they might import inflation. So December might be a time that they might actually raise rates.
So, Omar, a lot of this spells uncertainty right now. I mean, how are you positioning that? I mean, you were mentioning being at the long end, but we did see, you know, we were seeing yields post their worst month since October of 2022 in the U.S. I mean, how do you position defensively against all of these uncertainties that are percolating throughout the markets?
Well, if you want to position defensively, then treasuries traditionally have been the place to be defensive. So we think a lot of the news is actually priced into the long end of the curve in terms of the term premium, for example. And also one thing we're looking at is still the U.S. labor market. The last NFP print was pretty strong, might have been a bit of an anomaly. But you know, the recent labor market data that's been coming out in terms of the quits, in terms of JOLTS job openings, have been showing that there might be cracks underneath the surface. You know, the Fed has indicated that they're going to get ahead of that and cut rates. So we're still looking at, you know, 25 to 50 basis points cuts this year. And if that's going to happen, then I think that the 10-year is mispriced at current levels. Of course, there's a lot of forces pulling it up and down. But if you look through the noise, we think that it's probably a decent place to get in and add duration. And
wow. Do you think there's potentially more? Mm-hmm. Yep. Go ahead.
I was saying on the equity side, we've also been pretty long in our portfolios in U.S. stocks with a tilt towards, you know, the semiconductor sector and tech. Obviously, we're in the middle of an earnings season, and there were a couple of reports last night from mega cap techs that the investors didn't like. We'll see how the stocks perform today. But we're looking to maybe dial down some of that, you know, overweight exposure because we do see some risks in the horizon. Markets are pricing, U.S. stocks are pricing a pretty perfect economic scenario or outcome, you know, soft to no landing. And if we see the data turn, you know, that makes stocks really vulnerable at these levels.
But Omar, I mean, what are the risks that you see? Because what we were going to mention earlier is that Magnificent Seven, the market cap for all of these companies, still nearing an all-time high. So what are the risks you see that could potentially derail that?
Obviously, slowdown in earnings and the outlook for earnings is the #1 driver that can slow down that. Also, if we look at the stocks that have been carrying the index higher, obviously it's mega cap tech, but it's also Nvidia and the semiconductor sector. If we see a significant slowdown in demand for those chips, which we haven't seen thus far, and the numbers have been holding up, I think that could actually turn the tide. And we're not so positive sectors X tech and AI at these levels, at these valuations, especially with the potential macro risks out there. So we're looking at, Nvidia earnings coming out next month and earnings from the rest of the mega cap tech to kind of give us direction for the next few months to where stocks might go.
Next few months, next few days, there's a lot that investors in the markets are paying close attention to. Omer Chowdhry, great to get your insights this morning. Aditum Investment Management, Head of Global Fixed Income and Multi-Asset Strategies. They're joining us in our Dubai studio. Now, coming up, Nigeria's biggest bank is opening its first branch in Hong Kong. We'll be speaking to the Access Bank UK's founding CEO and managing director next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasadja in Johannesburg. Israel is considering a proposed ceasefire with Lebanon that would keep Hezbollah fighters away from the border. Prime Minister Benjamin Netanyahu is hosting senior White House mediators today as part of talks on a pause. If the plan was agreed, it would lead to a 60-day suspension in the conflict to ensure that Hezbollah doesn't receive any new arms from Iran and moves north of Lebanon's Litani River. That's according to Israeli officials. However, Hezbollah's new leader, Naim Qassem, says the group would only accept a deal that meets Lebanon and the militant group's demands. For more on this, let's bring in Bloomberg's Dan Williams, who's joining us now from Jerusalem. So, Dan, what would this ceasefire include? We've heard a lot of false starts when it comes to ceasefires. I mean, could this potentially be the one that actually gets through?
I think it potentially could. It would appear that just a few days before the U.S. election, the outgoing Biden administration is really investing additional energy into getting some kind of breakthrough in the Middle East more than a year into this war. And it's worth keeping in mind that since the last round of such efforts, Hezbollah's position has changed significantly. It's really taken a drubbing over the last 6 weeks, a combination of sabotage, air barrages, the assassination of its leaders, and ground incursions by the Israelis in southern Lebanon may have changed its own thinking about its survival and its relative strength within Lebanon. Now, it's hard to know exactly what's in the works. We're basing it on partial revelations from sources, leaks to media, but it would appear that indeed, under this plan that's going to be promoted today by 2 senior U.S. envoys, Hezbollah would be moved away from the border, it would be disarmed, and indeed the Lebanese army, the Lebanese state, might have a significant role in that. So again, obstacles remain. Hezbollah is still not out for the count. It still retains strength within Lebanon. And it's worth remembering that Lebanon itself has no formal relations with Israel. In fact, it's technically at war with Israel. So the idea of a workable diplomatic arrangement between those countries that would sideline Hezbollah, it still might be a tall order.
So, Dan, let's pivot then to what's happening in Gaza, because we're also hearing potentially Hamas then is open to another potential truce plan. I mean, this is another one that we've seen sort of happen and fall back a little bit. Is this potentially going to be another opening for conflict to be ending in the region?
Very good question. I think in Gaza, the dynamic I just outlined is similar. It may even be greater. Hamas lost its leader a couple of weeks ago, Yahya Sinwar. It was killed by Israeli troops. And now I think the organization in the Gaza Strip realizes that the entire territory, save a pocket of resistance in the north, has been overrun by Israeli forces. It might be wondering whether it can salvage some element of its rule, some survival for what remains of its leadership and its armed forces in that enclave. And it may be open to new overtures by Qatar, by Egypt, the countries that have been mediating between Israel and Hamas. It may be open to a new arrangement. it has leverage over Israel over the prospects of some 100 hostages still in Gaza being released. Israel believes that around half of them are still alive. Presumably, sadly, that number will be waning with time. But by the same token, Hamas realizes that the longer it holds those hostages, presumably in conditions that aren't ideal, they also may be losing their lives under Hamas control. And therefore, this might be the time to clinch a deal, to cut a deal that might actually satisfy the Israelis to the point where there is a reprieve in this more than year-old offensive in the Gaza Strip.
Yeah, important to remember that humanitarian situation. Bloomberg's Dan Williams in Jerusalem. Dan, great to get your insight and your reporting this morning. Thanks so much. Let's pivot now to the region. Nigeria's biggest bank is opening its first branch in Hong Kong in a significant milestone for its global expansion strategy. Access Bank UK says it's also looking to accelerate trade flows between Asia and Africa. Let's bring in Jamie Simmons, founding CEO and managing director for the Access Bank of UK, who is joining us in Hong Kong. So, Jamie, thanks so much for being with us. Give us a sense of what Access Bank UK's expansion strategy is compared to the parent company, because we have seen the parent company here on the continent continuing to expand. What are you thinking in this new opening in Hong Kong?
Morning, Jennifer. Thank you for having me here this morning. In terms of what we're looking to do in Hong Kong, Hong Kong's a pivot point, as far as we're concerned, into trade flows between Africa, China and the broader region. If you look at the level of trade flow in 2023, China alone in and out of Africa was $282 billion. So by opening in Hong Kong, it means that we can act as a trusted advisor to a lot of businesses that are in Africa and take the opportunity for those trade flows.
How do you see it then boosting your own operations? Because your focus hasn't necessarily been in Hong Kong. I mean, what do you think this could potentially open the door to?
We're the global arm of Access Group overall, so we operate in Dubai to pick up the MENA business flows. We operate in Paris, France, so that we're picking up the flows there. We have representative offices in India and Lebanon. So this continues to expand the regional and global growth of the group overall, and the international arm is critical as we support the increasing footprint of our parent across Africa.
As your focus is on trade finance, Jamie, I mean, what is the outlook then? You were talking about trade between Asia and Africa. What's your outlook for how this could potentially grow over the next few years?
Our view has always been that we will see exceptional growth. If you look at Africa, it's just under 20% of the world's population currently, 1.5 billion people. 60% of those are 25 and under. It's really an entrepreneurial region. It's a region that can't be ignored. Asia is growing as well, and therefore, inevitably, the opportunity for trade flows and trade business will increase, and we've seen that over the last decade. So we don't see a change.
You don't see a change. So then, Jamie, I think what's important to note is Access Bank, of course, your parent company operates in Nigeria, which has been a difficult time in terms of currency volatility. When you look at Access Bank UK, how much of are you able to really absorb a lot of what Access Bank, the parent company, is dealing with in terms of the volatility just in the local market there?
The volatility, you're right, has been extended over the last few years, but it's not new. If we look at our relative size within the group, we account for 20 to 25% of the group overall. We've always acted as a currency base for the group. We continue to do that. From a trade finance viewpoint, in any given year, we'll be supporting the group in trade finance flows of $3 to $5 billion, and we will just continue to increase that so that despite the volatility, we're able to support our customers both within Africa and also on a global basis.
Do you think anything could potentially derail those expansion plans and your ability to really absorb a lot of the shock that the parent company is having to endure?
I don't see them being derailed. I think inevitably they're going to be trimmed and adjusted because no business is immune to what's happening on the wider stage. So I think the only impact would be from a timescale viewpoint, not in terms of where we are aiming to be over the next 3 to 5 years. So timing, yes. I think inevitably that's going to come into play. But the overall shape and direction of the group, as it has been for many years, I do not see changing at all.
All right. Jamie Simons, the founding CEO and managing director of the Access Bank UK. Thanks so much, Jamie, for being with us there in Hong Kong as they open up their Hong Kong unit. Now, coming up, we hear from the CEO of the firm developing a cultural and heritage hub in Saudi Arabia. That's next. This is Bloomberg. Turning to Saudi Arabia, the CEO of developer Diriyah Company says the firm is on track to develop a global heritage and cultural destination, both financially and time-wise. He spoke with Bloomberg's Jumana Borsechi on the sidelines of the Future Investment Initiative's 8th annual conference in Riyadh. Take a listen.
Now, in the last 3 years in particular, people see it for themselves. So it gives them a lot of confidence. So obviously, the PIF would investing all over the world. But now we're seeing people come in. Just this FYI, I had an investor, a major developer from Italy, that wanted to come in on 2 of our hotels, and we will co-develop 138 villas in our Samhan region. And that's a 200 million euro commitment. Yeah. Then we had a Colombian investor with a $100 million commitment on hotels, and then an Emirati one just this morning, 100 million on hotels. So, you know, for us, we're getting, especially Diriyah, which is very far along, we're getting a lot of interest.
So tell me about the plans for Diriyah, and you say that you're very far along. So tell us what's to come in the future.
Yes, so Diriyah is very, very, very special because it sits in the middle of the G20 city of Riyadh. So a lot of people don't know this, but Beverly Hills in California is 14.7 million square meters. Today is 14.2 million square meters. So the way Diriyah will sit into Riyadh, a city destined to be 15 million people, is the same way Beverly Hills, but it's a difference. Diriyah is culture and heritage. It's about the birthplace of the kingdom, the home of Al Saud. So to attract 27 million tourists at some point, we're building the old city out of mud the way we did 300 years ago. We made 20 million mud bricks, right? So everything will look monochromatically, very beautiful. But to make it a pedestrian-friendly, walkable city, we had to put the whole infrastructure underground. That meant that we had a core drill through 10 million cubic meters of rock. So above, 42 hotels, 100 restaurants, 500 retail, 500 tech companies, 100 media companies, 50 entertainment companies. So we'll have universities, mosques, restaurants, hotels, 30,000 residences, and we're on time and on budget, pretty much halfway through from 18 to be ready for the expo in 2030.
That was Jerry Inzerillo, CEO of Diriyah Company, a PIF-owned firm responsible for developing the city, Diriyah, to be a global heritage and cultural destination in Saudi Arabia. Now, let's bring you some breaking news as we've been covering throughout the week. We just got SocGen's third quarter earnings. The expectation was they were going to show a surge in equities potentially, and what we got is the net income was a beat compared to what the estimates were. Their net income came at 1.37 billion euros. The estimate there was 1.27 billion. And we'll also pay close attention to what else the French bank tells us later. All right, stick with us. This is Bloomberg. This is Horizon's Middle East and Africa, our top stories this morning. The Bank of Japan holding its key rate steady amid renewed yen weakness and political uncertainty at home and in Washington. Kamala Harris and Donald Trump take aim at each other as the U.S. presidential campaign enters the final stretch. Plus, South Africa under pressure. The rand weakened and bond yields rose after expectations of a fiscal deficit came in wider than expected. It has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Welcome, of course, to the second hour and second half of Horizon's Middle East and Africa. Let's get you to your markets and see where they are positioned ahead of the trading day. U.S. equity futures softer this morning if we take a look at them right there. NASDAQ 100 futures down almost 0.7%. S&P futures also down about 0.4%. The markets are digesting, of course, the raft of earnings that we have been getting this week. And mainly what is dragging down the NASDAQ 100 futures is those reports that we got from Microsoft and Meta, partially disappointing in the post-market losses for those companies and for the markets. The S&P, as we mentioned, down about 0.4%. On the data front, we did get through third quarter GDP, U.S. GDP on Wednesday, getting a print that's a bit weaker than expected. If we take a look at the U.S. 10-year yield, it's about 4.2763, and it has been a volatile month for bonds as we've been covering all October. The Bloomberg Treasury Index actually posting its worst month since September of 2022, and of course we know there's still a bit of uncertainty ahead. Finally, let's take a look at Brent crude oil prices edging a bit higher, about 0.6%. We got a lower print of U.S. stockpiles, so Brent crude right now at 73.03. I want to bring you this chart, though, as we finish up getting the Magnificent Seven. Despite what is many people are describing as somewhat disappointing, a bit mixed, the Magnificent Seven, their combined market cap has soared 16.7 trillion, nearing its all-time high. There's still a number of questions that are persisting around the spending, around AI, but still, as this chart potentially showing, the profits are still continuing to reap from a lot of these companies. So we will wait to get Amazon and Apple later today and see potentially how that affects this chart and other market reaction. Let's, though, pivot to how markets in Asia are faring. It's been a busy day with the Bank of Japan. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, it is BOJ day. It stood pat. This was as expected. But I think you get the sense that the central bank has kind of learned its lesson from the July-August gyrations. If it wants to hike rates, it really has to telegraph this very carefully to the markets. So the move today was nothing out of what the market or the economists had been expecting. But there are a number of inconsistencies, so to speak. You take a look at the core inflation outlook for next year, that's been trimmed, but it also talked about some of the risks to the upside for price pressures next year. So this is something that Ueda will kind of have to fill in the blanks about when he speaks later. We are seeing Japanese equities lower today, a bit of firming on the yen. This has partly also been attributed to the squaring away of positions after 4 days of declines on the yen. Jen?
Thanks so much, Avril Hong in Singapore for us. Let's stick with the Bank of Japan. And as we mentioned, the Bank of Japan has held rates steady ahead of the Fed decision and the U.S. elections next week. Let's get more with Rajeev De Mello. He is the Global Macro Portfolio Manager at Gama Asset Management. So, Rajeev, as Avril was just outlining there's still a few blanks that Governor Ueda needs to fill in for us. I mean, what is the blank that you need filled in after we did get this decision?
Yeah, as Avril mentioned, it's a very delicate balancing act for the BOJ. After all, after the last meeting in July, of consequence, the equity markets in Japan really plummeted by significant, scary amount. So they will not want to repeat this kind of increase in financial instability. But at the same time, they also want to start continue lifting interest rates that would go in line with the higher inflation that they're seeing. They kept the inflation outlook at 1.9%, which is a very high number for Japan and quite out of sync of the very low interest rates they have right now. So it's normal they would increase interest rates. So they want to signal that they're increasing interest rates, perhaps for December or January meetings. But at the same time, they don't want to scare markets. They know definitely that there's the U.S. jobs number tomorrow, and there's the U.S. presidential election with quite an uncertain outlook on interest rates next week. And so for them navigating that, the key blanks for me is really to see that they don't do too much and they don't do too little in terms of the signaling of higher policy rates.
So does that just come then, Rajeev, through the language that we get through Governor Ueda, or is there something that really would give you the confidence that potentially the BOJ is heading in the direction that you're hoping it does, and balancing a lot of these uncertainties that it persist in the markets?
Yes, I mean he will be asked about policy action coming up. Their confidence in terms of getting inflation up higher. Now they're projecting. I think they did part of the exercise there by showing us in their outlook that they were expecting inflation 1.9. They increased the growth rate as well. That's an optimistic sign for Japan as well. So he will probably tell us that they're on track. They're on track to normalize interest rates. The economy in Japan has come out of deflation. And the whole economy is in a normalization mode, which is something they haven't seen for a long, long time. So that kind of optimistic outlook, in a way, would be something good, without emphasizing too much that they're going to hike rates in a hurry.
Yeah, I'm glad you talked about hiking rates, Rajeev. We did do a Bloomberg survey, and this was before the Sunday election there in Japan, and more than half of economists are expecting a December hike. I wonder if we don't get that December or January hike, does that spell more weakness potentially for the yen? I mean, what does that mean? How does that play out in a market scenario?
No, absolutely. If the signaling isn't for a December, January hike at this stage, we would have the yen weaken once again. And remember, the Japanese were very unhappy in the middle of the summer when the yen breached the 160 level. And they really had to intervene. They did significant currency intervention to get the dollar-yen down, to strengthen the yen. And then afterwards, they followed it up with some more hawkish comments as well. So if that is reversing, and we've seen in terms of the dollar-yen move, we've seen quite a reversal from the huge move in July and August. The yen's weakened about 10% since its strongest levels a month ago. So that would be a problem. That would really be a serious problem if the yen started on a very weakening path because they didn't convey a sense of hawkishness.
Rajeev, give us a sense of how you're strategizing then, given, again, a lot of this uncertainty. We mentioned how Japanese equity is slightly down today, but are you potentially bullish on the outlook going forward? Do you play into this at this point? Where are you positioned?
Yes, I mean, the Japanese equity market remains interesting and it's attractive. So yes, bullish that way. There is a lot of uncertainty around the events over the next few weeks. We can see that in option market volatility. A lot of investors have trimmed positions as well. We don't know really in what direction rates in the U.S. will go depending on the outcome of the election. Right now, the last move we had was the Fed cut by 50 basis points, and bond yields have risen by 60 since then. So it is quite an uncertain time, which will have an impact on Japan, on the yen as well, because higher U.S. rates does weaken the yen as well. So the U.S. side of the story is extremely important, and the BOJ and the press conference in a few minutes now is right in between the Japanese political issues, because let's not forget, in Japan, they also have their own political disruption.
Yeah.
It was a surprise that the LDP didn't, and its allies didn't win outright more than what happened. They really lost. So that's a worry for BOJ as well.
Yeah, it'll be fascinating to hear sort of how he communicates that to the market. Thank you so much, Rajeev De Mello. Great to get you on before we do get that press conference. The Global Macro Portfolio Manager at Gama Asset Management there in Singapore for us. All right, we were talking there with Rajeev a little bit about the U.S. election, so let's pivot to that. U.S. Vice President Kamala Harris says she strongly disagrees with Joe Biden after the president made comments seized on by Republicans as insulting to Donald Trump supporters.
And just the other day, a speaker at his rally called Puerto Rico a floating island of garbage. The only garbage I see floating out there is his supporters.
All right. Bloomberg's news editor, Jill Desis, is joining us now. So, Jill, give us a sense of where these candidates are positioned, especially on this issue, because this has really become a center point for the closing arguments for both of these candidates.
Yes, it really has, Jen. I mean, I was just on this program yesterday. We were talking about the potential for surprises in the run-up to the election next Tuesday. Well, now you've got this narrative that both sides are really trying to wrangle here. I mean, the origin of this is that there was a comedian speaking at a Trump rally in Madison Square Garden in New York City over the weekend. He used this comment calling Puerto Rico, which is an American territory, a floating pile of garbage that's obviously incensed quite a lot, considering, not only is it an American territory, but there's also quite a large Puerto Rican community in places like battleground states like, Pennsylvania that is really on the line here. You just heard President Biden's response to that, calling, it seems like he's calling supporters of Donald Trump that term, that pile of garbage. The Trump campaign has really tried to seize on this, saying that, this is, reflective of something akin to what we saw out of Hillary Clinton 8 years ago when she referred to Trump supporters as baskets of deplorables. But the Biden administration is trying to clarify that otherwise. This all kind of boils down to, obviously, Kamala Harris trying to distance herself from those remarks, really kind of seize on her messages about freedom, economics, and bring that all back into focus. But as you can see, Jen, this has obviously become a very messy situation that continues to drag on throughout the course of this week.
And happening at the same time, Jill, I mean, we got the third quarter GDP from the U.S. a bit weaker than expected. I mean, this isn't necessarily helping Harris's case. I mean, how do you see this potentially playing into anything more that we hear from her going forward?
Yeah, well, Jen, you've seen the Biden administration kind of spin some positives out of those numbers, talking about some strength in consumption there. I'm not sure how much that's actually going to weigh into the bigger picture here. I mean, Kamala Harris's message to voters has essentially relied on this two-pronged approach. On the one hand, you've got her saying that, Trump is a disaster for the country. We can't let this guy back into office, that kind of thing. On the other, you've got her trying to sell voters on economic policy. But regardless of what those broader economic data lines are looking at, I think what voters have really kind of zoomed in on here is, the pressure for inflation. And that's something that has really been a negative, obviously not just for Harris, but for the Biden campaign before he dropped out earlier. And because she is the sitting vice president of this current administration, that's something that might be a little bit difficult for her to wrangle away. So it has been kind of interesting to see her, try to, sort of toe this line between, she doesn't want Trump back in office, but at the same time trying to sell something that is, marks a new kind of economic message that things are going to get better for the American consumer going forward.
All right, just a few days to go. News desk editor Jill Desis there, recapping the latest in the election. Thanks so much, Jill, for that update there. Let's bring you, again, the breaking news that we got from SocGen just a few minutes ago. As we mentioned, beating the average analyst estimate for their third quarter income results. And they also gave us a bit of news here. Their deputy CEO is going to step down, and he will be replaced by a new deputy CEO that will be effective in just a few months' time. We also got word that there will be a new CFO named effective January 7th, and that is Leopold Alvier. But yes, a lot of news coming from SocGen. Third quarter loan loss provision at 406 million euros. The estimate there was 386.4 million. Their net income came in at 1.37 billion euros, and the estimate estimate there was 1.27. We're also paying close attention to some of the restructuring potentially that is happening within the bank. We've been seeing this with a number of banks as they try to cut down on their spending. So potentially this is part of the restructuring that is happening here with this bank. We also got the CET1 ratio for SocGen fully loaded at 13.2%. The estimate there was 13.2%. So paying close attention to those results coming in from SocGen. And there is a picture there of the new named CFO. All right. Coming up, South Africa sees wider deficits and higher debt in the budget review. We're live in Cape Town next. This is Bloomberg. We've put together a short online survey. Scan the QR code on your screen right now to tell us what you... Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. South Africa's first budget from the business-friendly coalition government shows public finances are under increasing pressure as the deficit widens. Finance Minister Adnoc Drilling says the economy is forecast to grow over the next 3 years.
We focus on a real GDP growth of 1.1% in 2024. This is lower than the estimate of 1.3% in February. Over the medium term, growth is forecast to average 1.8%. This underscores the need for higher inclusive growth to meet the aspirations of a better life for all.
Let's bring in Bloomberg's Ntando Takwana, who joins us from Cape Town. So, Ntando, you were in there for this. What is expected to underpin the growth? Give us a sense of what Adnoc is so bullish about.
Well, Jen, the first contributor to growth is, of course, the suspension of electricity outages, which have been seen from the improvements at Eskom, which is the state-owned electricity provider. We haven't seen rolling outages for the past 7 months, as well as some structural reforms starting to accelerate, and those are meant to pick up growth, as well as investment into infrastructure. The government is actually making a concerted effort to try and increase investment into infrastructure, which is seen as the backbone of South Africa's economy. So those are some of the things that South Africa is looking to do to increase the pace of growth. But Adnoc Drilling yesterday, the finance minister, also did say that debt is quite a big drag on growth, and that he's quite concerned about it. We've actually seen that it wasn't quite well received within the markets, with the rand weakening and bond yields rising. So there's that tension as well.
Were there any winners potentially then in this budget from Godongwana, Ntando?
Yes, and infrastructure companies would be the biggest winners in this budget, given South Africa's plans to ramp up infrastructure investments. So when you look at what South Africa plans to do, it's going to boost spending of equipment and building equipment. So that's one area, as well as some funds that have been allocated to the DRC's the funds that were allocated to South Africa's military to support a peacekeeping mission in Congo. And when we look at the other side, we look at the losers. Eskom would be one, as South Africa says they risk losing some funds that were allocated to a relief or support package to decrease the debt pile if they fail to meet some of the conditions that were attached to those relief funds, as well as bond investors. If this trajectory of debt keeps on deteriorating, they also stand to lose.
Yeah, it'll be interesting to see, continuing to see how the market reacts to this. Bloomberg's Ntando Takwana there in Cape Town for us. Ntando, great to get you on this morning. Thanks for your reporting. By the way, we'd like to hear from all of our viewers, so we've put together a short online survey. Scan the QR code on your screen right now to tell us what you'd like to see more of on Horizons Middle East and Africa, and of course, of all of Bloomberg Television, plus any other suggestions for improvement. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasaja in Johannesburg. Under the Biden administration, Taiwan has become a crucial part of the global chip supply chain and a key contributor to the world's AI future. Bloomberg's Annabelle Drewlers takes a closer look at the high stakes for the island's tech industries as China tries to level the playing field.
I will make sure that America, not China, wins the competition for the 21st century.
Two candidates with two different approaches toward Beijing.
To me, the most beautiful word in the dictionary is tariff.
Caught in the middle is Taiwan, which relies on the US for security guarantees, but has deep economic and cultural ties to mainland China. There are signs of a cross-strait decoupling, including fewer people self-identifying as Chinese. Yet Donald Trump's criticisms are just one reason Taipei's trust in the US is also at risk.
Skepticism towards Washington has been increasing in the last few years. We need to chart our own way and not completely depend on Washington and not completely economically depend on Beijing is hugely important.
Who's next in the White House matters to key chip companies on the island, facing uncertainty over industry support in the States, while Beijing pushes to level the tech playing field.
The entire ecosystem in semiconductor has to face actually stronger competition from China. At the same time, with the United States, it's not really clear how much of the subsidies will be coming to Taiwanese manufacturers. So net for Taiwan, it's a loss.
Pressure on Taiwanese chip firms to offshore at least some production is unlikely to abate, even if UBS is among those who see essential operations staying put.
The core and the benefit of this ecosystem, R&D, technology development cost is quite competitive here. So I think for Taiwan, they're going to try to keep it controlled, keep a core base here, and diversify what they need to.
Retaining crucial semi-production on the island carries a risk, as worries swirl that tensions between Beijing and Taipei could spiral into military conflict.
A conflict of some sort is very, very likely. If you think about the need to choose between the US and China, I think it's a very difficult one.
Still, Taiwan's government and big business alike say they're ready to work with either new US leader.
I don't worry about whether the Republic or the Democratic parties.
We already experienced many of the presidential elections, and then we mitigate risk and maximize opportunities.
Annabelle Drewlers, Bloomberg News.
All right, thanks for that, Annabelle. And we'll bring you some more breaking news. We're getting some more European bank earnings, this time coming from BBVA, the Spanish bank, beating on their third quarter net income. The expectation here was $2.39 billion, and it actually came in at $2.63 billion, and that is the BBVA third quarter net income. We're also getting some insights into their third quarter CET1 ratio, 12.84%. Their net profit at $2.63 billion, as we mentioned there. So a lot more earnings coming up throughout the day. Stick with us. This is Horizons Middle East and Africa. I'm Jennifer Zapasaja. Daybreak Europe is next.